Let's talk about the first big step in buying a home, getting pre-approved. For most buyers, this step is where excitement collides with stress. Because before you can even tour a home, you need that pre-approval letter in your hand. It tells you how much you can borrow and reassures the seller you're serious. But here's the thing, pre-approvals have dramatically changed over the last few years. And in 2025, AI and automation are reshaping how this step works. Some of these improvements are already happening right now. Others are still in development, being piloted, or slowly making their way into the mainstream. So let's separate the two, what's real today and what's still on the horizon. First, let's rewind to the old way of doing things. Traditionally, getting pre-approved meant gathering a stack of documents, pay stubs, tax returns, bank statements, maybe even a letter from your employer. You'd scan them, email them, or fax them over, and then you'd wait. On the lender side, a processor or underwriter would open every single page. They'd type numbers into a system, calculate your income by hand, check your debts, and verify your assets. It was thorough, but it was also slow and error-prone. If a single page was missing, delayed. If a number didn't line up, more back and forth. And for the buyer, that waiting period felt endless. Now, let's look at what's real in 2025. AI and automation have streamlined huge parts of the process. Most lenders can now pull your income directly from payroll providers. That means no more chasing HR for documents. Bank statement account balances can be verified instantly through secure digital connections. Documents like W-2s or pay stubs can be scanned, and the system automatically pulls the numbers instead of someone typing them in. Fraud detection is also sharper. If a bank statement was altered or a pay stub looks suspicious, AI tools can flag it immediately. That's protection for both the lender and the borrower. And one of the most important real-world changes, Fannie Mae and Freddie Mac both now allow positive rental income to help a borrower's case. That means if you've been paying your rent on time every month, that history can strengthen your pre-approval, even if your credit profile is thin. That's not hype. That's live right now, and it's helping first-time buyers qualify. So those are the improvements happening today. Faster pre-approvals, stronger fraud protection, and more inclusive credit considerations like rental history. Now, let's be clear about what's not here yet. You may hear that AI can instantly approve a loan using your phone bill or Netflix subscription payments. That's not true. Not yet. Utility bills, subscriptions, and other alternative data sources are being studied, but they're not universally accepted in underwriting. Another claim you'll hear is that AI can approve a mortgage in 60 seconds. That's also not real today. Yes, automation can verify data instantly, but humans are still in the loop. Loan officers and underwriters still make the final calls, especially for anything outside the most straightforward files. So, where are we really? We've moved from days of waiting to same-day pre-approvals in many cases. We've added new data points like rental history to help first-time homebuyers, but we're not yet at the point where AI alone makes the final call. Now, let's talk about what this means for buyers. Imagine you're a first-time homebuyer. You've always paid your rent on time, but you haven't built up much traditional credit. In the past, that could have been a deal breaker. Today, your rental history can now be factored in, and it might tip the scales in your favor. Or picture a self-employed borrower. Traditionally, analyzing self-employment income was a nightmare. Years of tax returns, business bank statements, adjustments for write-offs. It was a slow manual process. Now, AI systems can scan those tax returns, spot income trends, and surface red flags in minutes. That's less waiting and less back and forth. Realtors also benefit from these changes. Faster pre-approvals mean buyers can get out shopping sooner, and stronger pre-approvals mean sellers can trust that the deal is solid. In a competitive market, that makes a huge difference. So here's the bottom line. AI and automation are already making pre-approvals faster, more accurate, and in some cases more inclusive in 2025. What's real today? Instant verification of income and assets, smarter fraud detection, and rental history factoring into approvals. What's coming soon? Broader use of alternative data like utilities, predictive approvals that anticipate risks before they happen, and more personalized loan recommendations. For buyers, that means less stress and faster answers. For realtors, it means stronger offers and fewer surprises. And for the industry as a whole, it means a fairer, more efficient mortgage process. If you're ready to see how quickly you can be pre-approved with today's technology and with an experienced team guiding you, let's talk. I'll help you leverage the tools that are here now while keeping an eye on what's coming next.